Hello guys, I welcome you in this wonderful video. There is something interesting that I want to share with you, which is going to benefit you big time, more especially if you're a technical analyst or a price action trader. As we can see, we have a downtrend here, and when the market is moving in a downtrend, what we are looking for is usually selling opportunities or shorting opportunities, and those opportunities comes from these smaller waves which are going up, meaning the corrective waves. So our role as analysts is to observe the corrective waves, and then from the corrective waves we have to make sure that we execute our entries so that we benefit from the impulsive waves which are going down, indicated by my blue lines here. So when we try to figure out these entries, we use a lot of patterns. We use a lot of common patterns like flags, triangles, whatever price action pattern that you can think of. We use those patterns to figure out these entries. And there are some cases where the market will not play exactly like the patterns that we know. And then in those scenarios, we as traders, we tend to panic and we usually miss a lot of opportunities. Why? Because our trading is solely based on patterns, and which is something wrong. I know a lot of people are going to attack me on this one, but it's very, very wrong. Your trading should be flexible. It shouldn't only rely on patterns that you have read somewhere or whatever, although you have to utilize those patterns when you see them, but you don't have to be only searching for those patterns. I will make a simple example, and I believe that this example is going to enlighten you. So we have the two types of patterns, commonly. We have reversals ones, and then we have continuation. And then the continuation one, it is those flags that I was talking about. The reversals one, it is patterns like the head and shoulders, or patterns like the double top and whatsoever. Those are the reversals ones. So meaning, if you take it in this approach, you're going to be looking for the reversal patterns, and when you see them, it will be telling you that the market is reversing. And only you'll be looking for the continuation when the market is in a trend and you're trying to figure out an entry. But what if you see a reversal pattern like this taking place in a corrective wave or in a trend? What are you gonna do? Because you know, or because you have learned that you only use continuation patterns in trend, you're gonna miss an opportunity that is displayed through a pattern which is like a head and shoulder in a trend. Let me show you this simple example. We have this pattern going up here. Let me just remove that one. We have this pattern going up here, and if you can see clearly, we have the initial flow going up, and you only have one support here. So it'll be hard for us to rely on it. You only have one touch, and then above we can see, if you want to add maybe another or a resisting trend line, you can see it's right there above. We have these two confirmation, and then all of a sudden the market drops, and then it goes up again, meaning now it changes the flow, meaning we have now two lows that we can connect. And if you connect these two lows, let me change the color so that we can distinguish them. So if you connect these two lows, now we can see that we have a new flow. And if you can see now the pattern in completion, you can see that it's more like some kind of a head and shoulder pattern. Now, it's not a flag pattern, it's not a triangle pattern, it's more like some kind of a head and shoulder. And then we have our neckline with this dark line or black line, meaning if you are flexible enough as a trader, you're gonna make sure that you take this opportunity, because there is indeed some kind of a pattern. And it's not because of a pattern. I want to make this clear. It's not because it's a head and shoulder pattern, but it what this pattern tells you, because this pattern, you can see it has a high, and then it has a low, and then it has the next high, meaning for the fact that you see a high that is lower than that previous one, it means that the sellers, they are getting stronger and the buyers are getting weaker. That's what the pattern tells you. Apart from everything, nothing matters. What matters is the message that the pattern tells you. So we can see here, it tells us that the sellers are getting stronger and the buyers are getting weaker. So if you see something like that, it then means that you surely have to take this as an entry opportunity. But if you only be looking for patterns like this, flag patterns which are perfect for you to enter, you need to know that it will be hard for you to get opportunities in the market, because it's not always where the market is going to display some kind of pattern. Same thing applies in a reversal. If you're only going to be looking for some kind of a perfect head and shoulder pattern, you need to know that it will be hard for you to get such opportunities. The market is not always playing out in perfect shapes. You have to make sure that what you see, what the market tells you, you try to analyze it as it is, and then figure out if you understand that particular structure. For example, here, try to analyze this flow and see if you understand that flow, and then try to take advantage when that flow is broken or when that structure is broken. That's why I always encourage focusing mostly on breakouts in these scenarios, because those are the scenarios which tells you in terms of strength. Another example, or a last example, here we can see that with this initial flow which is in this blue channel, and then it was broken here. So for the fact that this initial flow is broken here, it should already give you some kind of a message that, okay, something is wrong now. It means that this corrective wave or this flow of the buyers is getting a little bit weaker, because now if you see a breakout, it means weakness and it means strength on the flip side. So it means that, okay, the sellers already started kicking in. So from this breakout, this high here was just a confirmation to say you can go short or you can sell, and then you open selling trade. So this is what you should do, guys. Don't only rely on pattern, because if you can see this downtrend, it's only few places where you see perfect patterns, and it doesn't happen like that. So if you rely only on just patterns, then you know it'll be hard for you. So be flexible, observe the waves, observe the strength, and then from there make your decision. So I'm just gonna keep it short and leave it here. Thank you guys for watching.